Welcome to another anti-money laundering and anti-terrorist financing outreach session, presented by the Anti-Money Laundering Anti-Terrorist Financing Department of the Bermuda Monetary Authority, which is also known as the Authority or BMA. I would like to note that throughout this presentation we will refer to anti-money laundering as AML and anti-terrorist financing as ATF. This session continues the outreach seminars that the Authority conducts with regulated financial institutions as part of our engagement strategy. This strategy aims to keep industry sectors updated on AML changes, the Financial Action Task Force focus areas, and other areas where companies can make improvements. We hope this engagement will increase the dialogue with industry on critical issues, assist the financial services sector in strengthening AML/ATF systems and controls, and enhance overall compliance with the legislation. Today's presentation will also focus on the digital asset business sector, which we will refer to as the DAB sector, and its main money laundering and terrorist financing risks and vulnerabilities, as well as examine the related trends and typologies identified in the supervisory work within the industry. We will also discuss the preventive measures outlined in the AML/ATF regulations, which are designed to enhance your AML/ATF program's robustness. Additionally, we will review compliance with the travel rule, as several entities have demonstrated challenges in this area. Finally, we will explore how the BMA's issued guidance notes can assist each entity in achieving greater AML/ATF compliance. This presentation is divided into two parts. First, we will discuss money laundering and terrorist financing risks, AML obligations, supervisory trends, and the Authority's expectations of the DAB sector. The presentation will also include information from the Financial Intelligence Agency on money laundering and terrorist financing trends, typologies, and suspicious activity reporting procedures. We will also cover the results of our supervisory work within the sector and discuss the preventive measures, otherwise known as the AML/ATF regulations, designed to make your AML/ATF program robust and comprehensive. Finally, we will highlight how the published guidance notes can help each entity to achieve greater AML/ATF compliance. We hope today's session creates the opportunity for more outreach and positive engagement with the BMA. Most importantly, Bermuda has been a leader in regulating digital assets since it published the Digital Asset Business Act in 2018. Bermuda is recognized as a global hub for DABs and has continuously embraced blockchain and fintech developments. Additionally, Bermuda supports various digital asset activities, including virtual coin transactions, digital asset payment services, digital asset exchanges, trust services, custodial wallet services, digital asset derivative exchange operations, and various other digital asset-related services. Bermuda maintains a regulatory framework that nurtures the growth of digital asset businesses while managing associated compliance concerns, including AML and ATF. The BMA plays an active role in overseeing this sector, ensuring robust customer due diligence and transaction monitoring across this growing sector. Furthermore, the Authority prioritizes AML compliance, using international standards to reduce risks related to digital assets and ensuring strict adherence to travel rule requirements. Another objective is to maintain a balance between innovation and compliance. The BMA's strategy encourages innovation in the digital asset sector while requiring strict compliance with AML and ATF regulations. The Authority established the Bermuda Sandbox regime to achieve this goal. It provides flexible licensing options and clear regulatory guidance for digital asset firms. The licenses include Class F for regular operations, Class M for testing and scaling, and Class T for pilot projects. Today, we will focus on several critical pieces of AML/ATF and sanctions legislation that impact the DAB sector. Regulated financial institutions need to be aware that the International Sanctions Act 2003 is a standalone piece of legislation separate from the AML and ATF legislation. In this session, we will concentrate on the 2008 Proceeds of Crime AML/ATF regulations, which will henceforth be referred to as the Regulations, or POCR, as well as the Supervision and Enforcement Act, also known as the SEA. It is worth noting that the Proceeds of Crime AML/ATF regulations encompass all regulated financial institutions, including DABs. The significance of these regulations cannot be understated, as they form the primary legislative framework upon which the Authority bases its assessment of a regulated financial institution's compliance during an AML/ATF on-site review. A regulated financial institution that is licensed as a DAB is expected to maintain a robust set of policies and procedures that comprehensively covers all aspects of the regulations. Today's agenda will delve into a few highlighted aspects of these regulations. In addition, regulated financial institutions are required to refer to the guidance notes for AML ATF regulated financial institutions on AML ATF 2023. Furthermore, it's important to take into consideration the sector-specific guidance notes for digital asset businesses. Let's not forget that the formation and evolution of Bermuda's legislation and regulation adhere to the international framework. This framework is revised periodically by the Financial Action Task Force and assessed by the Caribbean Financial Action Task Force. Bermuda's existing national risk assessment was developed using the World Bank's risk methodology model. This tool, designed for the traditional financial sector, provides detailed and nuanced insights into sector-specific risks. Moreover, I am pleased to share that we have established a specialized digital asset business national risk assessment. The assessment is based on the blended traditional financial sector World Bank model, which covers the years 2020 through 2022. This crucial assessment is nearing final approval by the National Anti-Money Laundering Committee. We are looking forward to its official release shortly. We do not underestimate the dynamism and growth potential of the DAB sector and the critical role of risk assessments in its development. The authority is also devising an enhanced national risk assessment targeting the DAB sector. We are excited by this project's potential and we aim to share the details as soon as they are finalized. On the following slide, we have outlined some crucial risks and vulnerabilities that the DAB sector must consider. Let's begin with anonymity. The secretive nature of certain transactions may enable individuals to conceal their identities and facilitate illicit activities. Another risk is cross-border transactions, where virtual assets move quickly across borders, making it challenging for entities to monitor and regulate transactions effectively. This highlights the importance of travel rule compliance. Another risk is regulatory arbitrage, where limited regulatory oversight may create opportunities for criminals to exploit virtual asset platforms to launder money without adequate scrutiny. Fast and irreversible transactions or peer-to-peer and rapid transactions are another risk that can expedite money laundering, making it difficult to trace the origin of funds, especially from person to person. Risks in this sector also include privacy and emerging technologies, where privacy-focused features, mixing services, and innovative technologies such as privacy coins can enhance anonymity. This makes it challenging for law enforcement to trace the source and destination of funds involved in illicit activities. Furthermore, criminals may manipulate the market by exploiting relatively more minor and less regulated virtual asset markets for pump-and-dump schemes that create opportunities for money laundering through price manipulation. The rise of decentralized finance, also called DeFi, platforms also introduces new challenges. Decentralized and permissionless systems may lack traditional controls, enabling potential money laundering activities. Another risk is the integration of decentralized finance with traditional financial systems. The interaction between virtual assets and traditional financial systems may introduce money laundering risks requiring coordinated regulatory efforts across sectors. When outsourcing AML and ATF functions, it is important to consider multiple risks. These include limited control over outsourced entities that may result in inadequate AML measures. Additionally, outsourced providers may not adhere consistently to AML regulations across jurisdictions. External entities may lack adequate training, which can increase the risk of overlooking suspicious activities. From a technical perspective, complex networks may emerge, making it challenging to trace and mitigate money laundering and terrorist financing risks effectively. Another risk is over-reliance on outsourced entities, which could slow down timely responses to emerging risks or regulatory changes. Reliance on third parties also presents vulnerabilities. Inadequate AML compliance by third-party providers could potentially lead to regulatory issues and challenges related to legal obstacles or restrictions in sharing essential information. Risks may also arise from over-reliance on third-party systems, resulting in operational disruptions and further legal or reputational consequences. Let's examine and understand the requirements a regulated financial institution must undertake to develop an effective business MLTF risk assessment. This involves understanding the various threats and vulnerabilities faced by the DAB sector. Let's look at the sequential steps companies should undertake to identify and manage these risks effectively. Step 1. Ascertain inherent risks. Regulated financial institutions must identify potential risks concerning their customer base, business relationships, geographic operations, products, services, channels, and transactions. It is important to remember that these risks are the initial challenges before mitigation measures are applied. Regulated financial institutions must allocate risk ratings based on the attractiveness of these areas for potential money laundering or terrorist financing activities. Step 2. Set risk tolerance. A regulated financial institution's risk tolerance is the level of risk it is willing to endure to achieve its business objectives. Regulated financial institutions might choose to maintain a high tolerance but must ensure that risk mitigation strategies equal the risks faced. Step 3. Develop risk mitigation measures. Regulated financial institutions must formulate and document appropriate policies, procedures, and controls to effectively manage and mitigate the identified risks. Step 4. Evaluate residual risks. After the application of mitigation measures, residual risks will remain. These risks should be assessed based on customers, business relationships, geographic areas, products, and services. In cases where residual risk exceeds a regulated financial institution's risk tolerance, it must revise its mitigation strategies or consider ceasing or declining the business. Step 5. Implement risk mitigation measures. Day-to-day activities must reflect the risk mitigation policies established by a regulated financial institution. Senior management must ensure clarity. Employee training should mirror the identified risks. Board oversight is instrumental in this step. Step 6. Monitor and review risks. Lastly, a regulated financial institution must regularly reassess its risk-based approach as money laundering and terrorist financing threats can evolve due to changes in customer behavior, technology, market conditions, and new threats. Therefore, we strongly recommend developing a risk matrix for business money laundering and terrorist financing risk assessments. This provides a comprehensive visual representation of all identified risks and facilitates informed decision-making by highlighting high-priority risks. It also aids in channeling resources toward high-risk areas, enabling a more efficient approach to risk management. Our focus today is the crucial concept of customer risk assessment, which forms a cornerstone of successful AML compliance programs. To start, we have the customer risk evaluation, a deep dive into customer profiles to anticipate their potential risk of involvement in money laundering or terrorist financing activities. Factors to consider include customers' professional activities, geographic locations, transparency levels, and criminal participation history. Following this evaluation, the geographical risk assessment then evaluates the jurisdictions linked to a customer's business activities. Some geographical regions can pose higher risks due to weak legal infrastructures, rampant corruption, or through their status as popular tax havens. The third component reviews risk associated with products, services, and transactions. It is crucial to note that the risk potential can vary significantly across these categories, with complex or high-value transactions, like those involving virtual currencies, being particularly important. Next up is evaluating the channel delivery risk. This concerns the different methods and channels businesses utilize to deliver their products or services, bearing in mind that online or non-face-to-face methods can often present higher risk levels. The final steps focus on screening and ongoing monitoring. Rigorous customer screening should be conducted at the point of onboarding with ongoing monitoring to identify any changes or trends in the customer's activity over time. Additionally, the compliance officer's role is pivotal. They should have a pervasive role throughout the entire risk assessment procedure, especially in relation to high-risk customers. Detailed records should be meticulously maintained in the customer's file. Every customer risk assessment must include a customer's risk rating, which must be classified as low risk, medium risk, or high risk in accordance with Regulations 10 and 11 of the Proceeds of Crime Regulations. We must adhere strictly to these guidelines to ensure the robustness, efficiency, and risk-based approach of our AML compliance programs. Now, let's look into preventive measures a regulated financial institution must undertake to thwart money laundering and terrorist financing by closely examining several critical regulations. There is a particular focus on customer due diligence, including exhaustive ID verification procedures such as gathering necessary documents and verifying indicated information, as in sections 4.27, 4.28, 4.29, 4.38, and 4.57 of the Guidance Notes for AML ATF Regulated Financial Institution on AML ATF 2023. Beyond verification, all AML ATF processes, including transaction monitoring and record keeping for reporting, should be meticulously documented to ensure precision, transparency, and effectiveness. We advocate for businesses to use state-of-the-art blockchain analytics tools in transactions. These tools make real-time monitoring of transactions and swift reporting of suspicious activities possible. It's also prudent to retain accurate records of all transactions and due diligence paperwork for at least 5 years. Continuing on this topic, DABs should use a risk-based approach for AML and ATF, adjusting preventive measures based on risk assessments. In addition, other vital components of a robust AML ATF program include implementing stringent internal controls, conducting customer screening against sanction lists, utilizing blockchain analytics tools, regularly submitting suspicious activity reports, and maintaining an up-to-date comprehensive sanctions program. Maintaining the minimum requirements across all of your branches and subsidiaries is essential, as is the requirement to halt transactions if suspicious activity is observed. Regulated financial institutions must ensure that they meet their independent audit obligations and have appointed a compliance officer at the managerial level. The compliance officer must undergo adequate training to effectively fulfill their responsibilities and oversee the company's AML ATF program. If you rely on a third party, you must ensure that they comply with Bermuda's AML obligations. When outsourcing, proper procedures must also be in place to guarantee the effectiveness of third-party screening practices that focus on employee proficiency and integrity. Despite outsourcing, regulated institutions bear the ultimate responsibility for any shortfalls. The role of the money laundering reporting officer is crucial, and they must be fully trained and supported by adequate procedures. A crucial extension of all this is providing role-specific AML ATF training for compliance and reporting officers, management, staff, and board members. With these steps in place, DABs will be well equipped to deal with AML ATF challenges robustly, proactively, and effectively. The following slide outlines the procedures for transferring digital assets. The travel rule mandates that, during digital asset transfers, the financial institutions involved must obtain and share sender and receiver identity information at or before the point of transaction. This rule is named the travel rule because it requires personal data to travel with the transfers. Furthermore, Part 4 of the AML ATF regulations outlines the necessary compliance requirements. The payment service provider must implement robust measures to detect whether digital asset transfers come with related originator and beneficiary information. Based on a risk assessment, they should either reject the transfer or demand comprehensive payer information. Additionally, insufficient information should be considered a factor necessitating enhanced security measures. This includes assessing suspicion of money laundering or terrorist financing activity and may require filing a suspicious activity report with the Financial Intelligence Agency. Given this point, payment service providers can implement several steps to enhance the risk mitigation processes. The first is to detect whether digital asset transfers are accompanied by information about the originator and the beneficiary. This can be determined based on the risk assessment results, which indicate whether to execute or reject a digital asset transfer without complete information about the originator or beneficiary. The next step is to make a report to the BMA if the payment service provider fails to supply the information to the payer. Finally, any omission and incomplete information should be considered factors for applying enhanced measures and assessing the suspicion of money laundering or terrorist financing activity. Subsequently, a by suspicious activity report should be filed with the Financial Intelligence Agency. We have briefly reviewed the obligations in the Proceeds of Crime regulations, which again is the primary legislation we use when evaluating a company during an on-site. Regarding supervision, the AML ATF department has determined that DAB-licensed regulated financial institutions have faced compliance challenges regarding several regulatory obligations, as outlined on this slide. We encourage you to review your policies and procedures with the Proceeds of Crime regulations, particularly regarding customer onboarding policies and the identification versus the verification process. Lack of jurisdiction-specific training for Bermuda and awareness of such jurisdiction-specific regulations are some areas that frequently require policy and process improvements. The BMA reviews regulated institutions' compliance with Bermuda's sanctions regime. We check that your sanctions policies and procedures are appropriately and effectively applied. During our on-site visits, the authority also identified a need for additional training in this area. Another area of concern that needs attention is independent audits related to AML, ATF, and the sanctions program. The problem is that these audits do not cover all the areas they should. An audit report should provide a complete picture of where a company can improve its AML program. When done correctly, these audits can help a company lower its risk of breaches against Bermuda jurisdiction regulations. Finally, when regulated institutions use shelf policies written by third-party consultants and rely on these firms without a solid understanding of the Proceeds of Crime regulations and AML obligations, they risk noncompliance. Having a third-party consultant does not automatically equate to noncompliance. However, we have found that AML policies have not been appropriately implemented when entities use this option. This can lead to challenges during an on-site review and often reveal systemic issues. Customer due diligence. As practiced in Bermuda, comprises two vital steps: the customer identification process and data verification procedures. The initial step, customer identification, requires collecting essential information from customers. This includes customer details and address information, wherein customers share their names and residential addresses or any other relevant information. The subsequent step, the verification stage, requires the customer to present a reliable document to substantiate the information that they have shared. Let's discuss the verification process in greater detail. A Bermuda-regulated financial institution verifies customer information in two ways. The first involves using physical documents, also known as documentary means. Government IDs such as passports, national ID cards, or driver's licenses can also be suitable proof of identification. Apart from the identity, the residential address must also be verified using acceptable documents, such as a court appointment order, current land tax letter, bank statement, or a utility bill no more than 3 months old. The second avenue uses electronic verification services, an increasingly preferred method for non-face-to-face onboarding. Through this efficient process, third-party services cross-check the authentication of the ID provided for verification. They conduct a liveness check of the customer, ensuring the authenticity of the submitted documents. For proof of address, the same third-party service cross-references the address details with various data sources, such as credit bureau records, electoral rolls, or national ID records, depending on the customer's location. For audit purposes, a regulated financial institution must maintain an audit trail of the electronic verification process from start to end. Let's discuss how these standards are applied. Bermuda's customer due diligence standards are similar to those in the US, UK, Canada, and Germany. While the processes are specific to Bermuda, they are also used in similar jurisdictions. A crucial aspect to consider while using any electronic verification service is registering the selected service provider with a data protection agency that aligns with Bermuda's AML ATF standards. The service provider should also demonstrate transparency in its verification procedures and have access to both positive and negative information sources. Regardless of the method used for identity verification, a regulated financial institution must ensure its system effectively records and stores the verification information. This record of the means of verification, including the relevant data, should be retained for future reference to help ensure compliance with customer due diligence guidelines during onboarding and ongoing monitoring. The next segment of this presentation explores the AML ATF on-site examination process. As part of the money laundering and terrorist financing preventative measures and controls, the BMA conducts on-site examinations, whereby we review the AML framework to ensure it meets the legislative requirements. This prevention mechanism helps to ensure that Bermuda's regulated financial institutions are not used for money laundering or terrorist financing. Therefore, regulated financial institutions must be prepared to showcase a robust compliance framework. This should be considered business as usual since we only check against what companies have already committed to as part of their licensing requirements. The documented AML ATF policies and processes should be reviewed annually to ensure compliance with the regulations. This also includes a regulated financial institution demonstrating that the appropriate training has taken place. During the on-site examination, interviews with senior management and select staff will occur. File testing submissions should be submitted promptly. Documents should not be modified once the on-site review has started, except for client requests or routine changes to customer information. Finally, it is advisable to discuss the outcome of the on-site review with senior management during the closing meeting. If significant findings or gaps are identified, enforcement will be considered. The next 3 slides list sector-specific resources for DABs operating in Bermuda. They include Financial Action Task Force Guidance, Bermuda's Laws and Regulations, a summary of key laws related to AML ATF in Bermuda, BMA guidance notes and links to the respective legislation. They include Financial Action Task Force Guidance, Bermuda's Laws and Regulations, a summary of key laws related to AML ATF in Bermuda, BMA guidance notes and links to the respective legislation. Notably, the authority offers a free service provider training course which is open to regulated financial institutions and service providers who want to reinforce and validate their knowledge of Bermuda's AML ATF regime and the AML ATF requirements when considering a DAB license under the Digital Asset Business Act. The following slides are from the Financial Intelligence Agency. During this segment, we will cover 4 main areas: suspicious activity report filing statistics, DAB trends and typologies and the quality of suspicious activity reports, suspicious transaction reports and reporting reminders. Let us start with an overview of Suspicious Activity Report and Suspicious Transaction Report filings submitted from the first quarter of 2021 to the second quarter of this year by DABs. There were 14 filings in 2021, 352 in 2022, 206 in 2023, 116 in the first quarter of this year and 54 in the second quarter of 2024. Overall, 742 filings were made during this time by 6 DABs. Out of these 6 DABs, 4 have full licenses, and 2 have modified licenses. Also, 19 DABs registered with the Financial Intelligence Agency during this time. Crime classifications that were identified within DAB filings include fraud, market abuse, money laundering involving sanctions, narcotics, terrorist financing, proliferation financing, and sexual exploitation. Over the past 4 years, several trends in the DAB sector have been consistently observed. This presentation points out that these trends are self-explanatory. They include exposure to addresses linked to mixing services, avoidance of providing documentation for the source of funds or presenting questionable sources, transactions lacking clear economic, business or legal purposes, and connections to addresses associated with the darknet or gambling platforms, as well as the rapid transfer of funds off the platform. It is important to note that while exposure to gambling platforms is not a crime in Bermuda by itself, it is considered a breach of the DAB client contract. Gambling may raise concerns if linked to money laundering, terrorist financing, or other predicate offenses. This section will review a DAB typology involving suspected terrorist financing. In 2023, a DAB detected direct and indirect receiving exposure to addresses attributed to the National Bureau for Counter-Terror Financing, categorized as terrorist financing by a blockchain analytics company, in Person A's account. This seizure list is a list of cryptocurrency addresses identified by the National Bureau for Counter-Terror Financing of Israel as associated with terrorist financing. Person A's account was created in 2018 and verified using a Palestinian Authority passport. In September 2019 and December 2020, Person A received 2 deposits totaling 0.075 Bitcoin. According to the blockchain analytics company, 1 deposit came directly from addresses attributed to the National Bureau for Counter-Terror Financing seizures list. The other deposit may originate from addresses attributed to the same list. Although this activity predated the DAB's operations and was only recently detected with the sector's evolving transaction monitoring tools, the terror financing indicators were reported for intelligence purposes. The DAB detected this suspicious activity in 2023. Person A's account was disabled with a current balance equivalent to $0.50, 0.000022 BTC, and the user was OFF-BORD. The DAB selected report indicators to identify the attributes noted within the suspicious transaction reporting narrative include Bitcoin, cryptocurrency, for information only, high-risk country, no source of funds, proliferation financing, weapons of mass destruction, terrorism-related, and terrorist financing. The business also took decisive actions regarding the client's account due to several red flags that indicated suspicious activity. The account was disabled, leaving a balance of $0.50, and the user associated with the account was OFF-BORD. The concerns raised included exposure to addresses linked to the National Bureau for Counter-Terror Financing seizures list, known for connections to terrorist financing. Additionally, the user was from a country with a high risk of terrorism, kidnapping, and armed conflict. Moreover, the origins of the cryptocurrency received, both directly and indirectly, could not be determined, further raising suspicions. These measures reflect the DAB's commitment to maintaining the integrity of its operations and adherence to regulatory compliance. The details and documents provided with this report help the Financial Intelligence Agency understand terrorist financing, proliferation financing, and money laundering threats related to Bermuda. In recent years, Suspicious Activity Report and Suspicious Transaction Report filings have been of high quality. No reports were rejected from January 2021 to the second quarter of 2024. To support the Suspicious Activity Report and Suspicious Transaction Report narrative, companies must always include supporting documentation, such as copies of IDs, account opening documents, and adverse media links. This information assists with the analysis of the Financial Intelligence Agency and helps disseminate informative disclosures to the competent authorities in Bermuda and other jurisdictions. We would also like to stress the importance of providing supporting documentation and account details for the beneficiary's wallet or bank account. Consequently, the Financial Intelligence Agency will guide DABs in effectively submitting suspicious transaction reports involving suspect transactional activity via manual inputting or XML upload. This transactional activity will allow the Financial Intelligence Agency analysts to readily access and identify the amounts and currencies involved. Also, guidance will be provided on the information needed for consent requests and the consent regime concerning confiscating digital and fiat currency. Companies should consider the following information when making a suspicious activity report or suspicious transaction report filing. When the DAB seeks consent due to pending suspect transactional activity, it is important to submit a suspicious transaction report into GoAML. This allows Financial Intelligence Agency analysts to readily identify any suspicious activity. Thirdly, please report declined business to the Financial Intelligence Agency when adverse media or suspicious activity is identified. Remember to keep a declined business log as mandated by the BMA. This log is based solely on a client's, or potential client's, refusal to provide customer due diligence or know your client documentation. The log may provide value for future analysis and investigations by the Financial Intelligence Agency or the Bermuda Police Service. Lastly, the Financial Intelligence Agency discourages filings based solely on a client's or potential client's refusal to provide customer due diligence or know your customer documentation when no suspect activity can be identified. As we conclude today's outreach session, I would like to highlight a few relevant points from this presentation. From our perspective, one of the main points of concern is the need to develop a strategy focusing on addressing the most significant risks in your AML ATF program. This includes checking your business risk assessment every year or when needed and updating it when money laundering or terrorist financing risks change. Also, compliance officers play a vital role in ensuring your company remains compliant with the rules. They must be aware of the details of the proceeds of crime regulations and ensure that all employees in your company are aware of them and adhere to them. It is also important to do what we call a gap analysis. This is when you check to see that your AML, ATF, and sanctions policies, procedures, and controls are up to date and align with the latest proceeds of crime regulations and other related laws. Another point of discussion was the difference between identifying a customer and verifying their identity. And a word of caution: if you are considering outsourcing some of your work to another company, you need to monitor those activities closely and ensure they are being done correctly. Remember that your company will be accountable for any failures associated with outsourcing or reliance. Today, we talked about the risks and warning signs related to money laundering and terrorist financing, along with the insights from supervisors and ways to prevent these issues. Our friends at the Financial Intelligence Agency have also shared trends, patterns, and report-related information specifically for the DAB sector. This information must be considered when updating your training program and the company's policies on AML ATF. Our goal for today's outreach is to provide you with the knowledge to strengthen your company's defense systems and improve its adherence to anti-money laundering and anti-terrorist financing rules. As regulators, it is our job to help you reach these goals. But this is not just about your company. Each of us plays a role in strengthening Bermuda's defenses against money laundering and terrorist financing, with the aim of keeping out the bad guys. To do this, we need to put time and effort into improving our compliance with anti-money laundering and anti-terror financing regulations, sanctions, and regulatory compliance standards and requirements. This will make Bermuda's regulated financial institutions more capable of facing challenges. We can look forward to better business results and a more substantial reputation by enhancing our systems, controls, and reporting processes. We urge you to join us on this journey because it is not only for the good of your company but also for maintaining Bermuda's top-notch reputation as an international financial center. If you have questions you think of later, please do not hesitate to contact your industry association, or the BMA directly at aml@bma.bm or the Financial Intelligence Agency at info@fia.bm. We are always available to assist you.